In November, Bitcoin reached an all-time high of $68,000. Just a few months earlier, El Salvador became the first country in the world to make Bitcoin a legal tender. The market value of all cryptocurrencies recently broke $2 trillion. Bitcoin and other crypto are an example of FinTech. FinTech refers to technological innovations that affect financial services. My name is William Weller and I'm 17 years old. I founded the Engineering Society at my school. I enjoy programming applications for Android and using Python for financial analysis and algorithmic trading. In this video, I will guide you through the impact of FinTech on the Bank of England, describing the challenges and their solutions. Past technological developments, such as availability of more powerful computers, has impacted the bank already, facilitating, for example, the move towards real-time payments. But in my view, the pace of technological innovation has significantly accelerated in the past decade. How is FinTech impacting the mission of the bank? Some examples. 1. Crowdfunding platforms in which commercial banks are no longer involved in the lending process. If crowdfunding were to become a significant part of the lending market, disintermediating the banking sector, the monetary policy transmission mechanism could be altered. 2. The emergence of new FinTech business models, such as insurtech and digital banking, which if not properly regulated, could give rise to financial stability concerns. 3. New mediums of payment, such as the so-called stablecoins like Facebook's DM. Now, what is a tech challenge? Increasing digitalization of payments leads to dependency on big US tech firms, resulting in a loss of sovereignty. The bank will no longer be able to fulfill its mission to ensure smooth operation of its payment system if it has no longer control over it. As Gustav Peebles, an expert in monetary history, stated, crypto is a reignition of an age-old fight between private and public currency issuers. Banknotes and coins and use of central bank money for bank transactions are not going to disappear from use overnight. But if the bank wants to build a safe alternative, it needs to start thinking already now. So, what is the solution? The Bank of England might need to provide the market with a central bank digital currency, or CBDC, if they don't want to let the future of money pass over them. Simply put, CBDCs are the digital form of a country's official currency. There are many questions that central bankers will need to ask themselves before launching CBDCs. 1. In which areas should a central bank digital currency be used? For consumer transactions, for transactions between banks, or for cross-border transactions? 2. What technology would be used for processing the transactions? The bank's existing payment infrastructure for large payments could be reused in theory. Would use of blockchain technology also make sense in some use cases? 3. Who would provide the front end and deal with customer support? Would the bank outsource this to commercial banks? 4. And what about privacy? Would records of transactions be kept? Would there be additional checks on high-value transactions which may be conducted by money launderers? 5. There is also a threat of cyber attacks on the bank's IT infrastructure to steal money. So it would need to be highly secure. To conclude, many different aspects of the bank's mission will be affected by FinTech, but most importantly on the digital payment side. It will be important for the bank to devote resources to monitoring all these technological developments, understanding the new business models, and assessing what should be the response. Creating and operating a digital currency will be a significant investment, but the time to start investigating is now. The bank will also need to recruit more experts in information technology and FinTech, and also consult with other central banks to get their experience. I hope you enjoyed my video as much as I enjoyed producing it, and I would love a chance to tackle these topics in the summer.